December 2022 is going to be filled with a ton of opportunities for the stock market. It's going to be one to remember. In this video, we're going to go over all of the important things you need to know heading into December of 2022. We're going to look at a lot of great data and charts in this video. And we're also going to be talking about a potential Santa rally towards the end of the year. We have an awesome video today. There's a lot of important things we need to cover, so make sure to stick with me towards the end, but we're going to get right into today's video. So looking at the stock market this year, clearly it has been brutal. There's been a ton of selling pressure, and the S&P 500 or SPY, the SPY ETF, has been stuck in this downwards channel all year long. We've basically just been downtrending in a very consistent way, and we keep struggling to break through the upper resistance level time and time again. At the same time, we are also bouncing pretty strongly and pretty consistently off of major support lines, which is a good thing, but we've just been channeling back and forth, back and forth, back and forth. So the main thing to know going into December is we know most of the time December ends up being one of the best months of the entire year, but we're also at a very crucial resistance level right now that has not been broken all year long. So we need to look deeper into what can be the catalyst to actually get us to break through this resistance level, or potentially have a giant rejection and maybe a retest of that lower support. So we have a lot of important things to cover. The first one I want to talk about is VIX. Basically, this is the VIX index. The main thing you need to know is that when there's a lot of fear and uncertainty in the market, this thing pops, and it pops big time. In 2020, during that COVID crash, it just exploded up. It went from you could say 12 all the way up to 84, and many other times where there's just mass fear and selling pressure, this thing explodes up. So it's been a pretty good gauge historically of just fear in the market. And basically over the past couple years or so, VIX has been flat / downtrending. Basically, what we've been seeing over the past year especially is higher lows. So if we look a little bit deeper, we're making higher lows, which is not necessarily a good thing for the market, but at the same time we're making lower highs, just like we're seeing up here. And we're also at a pretty crucial support line for the VIX. But what's been very notable with this is every single time VIX has been to this $20 level, that actually has been a very good support, and VIX popped up. And what this means for the overall market is when VIX rises, the S&P 500 actually tanks down a decent amount. So check this out. This is actually pretty interesting. So if we add SPY to this chart right here, and I'm going to enlarge it a little bit, every single time VIX touches 20, that ends up being a top for the market. So we could see right here, VIX was right around 20 on March 29th, top for the market. VIX touched 20 again around August 12th, top for the market. VIX touched 20 recently, right? And we'll see what happens. But for the most part, every single time VIX has touched 20 lately, it has ended up being a pretty bad time for the stock market in the short term. So that's not necessarily a good thing, but this December will be unique, and there's other important data points we have to look at besides this VIX data, and you'll see that in just a second. So if we go back to the SPY just for 1 second, another important thing I want to show is that basically the average recovery over the past year has been kind of interesting. So we could see obviously there's been a lot of selling pressure lately, but we have had some very strong recoveries to the upside as well. A lot of people don't even realize this, but we actually see some of the strongest green days during market corrections than any other time. So for example, let's say we zoom into any time period during 2020 or 2021. Basically when we were making all-time highs, yes, the stock market was at an all-time high, but if you look at these candles, they weren't that big. You know what I mean? Yes, the stock market just continuously grinded higher day by day by day, and that's awesome. But if we look at notable market corrections, you see those true volatile, explosive green candles during times of peak fear. That's when you see like that crazy explosive movement, and that is important to keep in mind heading into this December of 2022 because there's been quite a lot of fear and selling pressure over the past year. Now, if we look at the most recent uptrends this year, we can see the first major one from the low to the high was around 12.2%, and that was in March, right? That's awesome. It basically was a full channel test, you can say. It went all the way from that bottom trend line support all the way to the top resistance. 12.2% pop from the low to the high. The second major one was at the end of May. This wasn't a full channel test, it was kind of like a half one. It bounced off that lower support and it popped up by 10%, but it didn't even touch that resistance level. And then like the most significant uptrend of the entire year actually happened in July. Basically from the low to the high, it went up almost 20%, which is absolutely insane. It went from below the bottom trend line all the way to touching the top trend line, right? Top resistance, and ended up falling right back down. The most recent uptrend from the low to the high has been around 18% or so. That's a decent uptrend for such a short period of time. But realistically, the stock market or the SPY will not be stuck in this channel forever. At some point, we are either going to rip above resistance or we're going to fall below support. No one knows when, but we do know at some point we are going to see that breakout. We're going to look deeper into a couple other data points to give us an idea of when we might see that breakout in just a second. So while the stock market has like mixed signals right now in terms of charting, there are some pretty important things to keep in mind with just like the news base or the news side of things for the market. December will be very, very volatile and special because we have another interest rate decision and we have inflation data coming out next week. So basically, if we look at inflation data over the past year, it has been excessively high and it cannot stay this high for this long or there will be some serious problems for the stock market and the economy. The good news is that inflation has been on the downtrend lately, so that's awesome. But at the same time, it's still pretty damn high and it needs to fall soon. So basically what's happening on December 13th, we're going to get that next reading of inflation data. If that comes in good, meaning that the data is lower than expected, then basically what's most likely to happen is we're going to have the chairman of the Federal Reserve, Jerome Powell, increase interest rates yet again by 50 basis points. There's a 79.4% chance of that happening, and that's a good thing because as the government increases interest rates, it will make inflation go lower. At the same time, the government is trying to balance with lowering inflation data but not crashing the economy. We can see this is the unemployment rate and it's still very low, around 3.7%. That is awesome, right? That's awesome, very, very good. But what's going to happen as the, I guess you could say, economy gets worse, this data will get higher and higher and higher, but the Federal Reserve is trying not to have a full-on brutal recession. So that's why they're trying to just like taper the interest rate hikes. So it's just like a nice blend of lowering inflation while at the same time not crashing the economy. So the main thing you need to know is on December 13th, we have very important inflation data coming out. And depending on how that data is, Jerome Powell, the chairman of the Federal Reserve, he's going to increase interest rates either way. It's just a matter of, will he increase interest rates by 50 basis points or will it be 75 basis points? Ideally, we want 50 basis points with like a optimistic outlook for the future. So definitely keep that in mind. Now, another important thing I want to point out really quickly is while we do have inflation data going crazy, what has been very good for the market lately is yields are starting to drop a little bit. So basically, yields have exploded this year. That's why mortgage rates have been rising so much and every other type of interest rate has been rising so much. Treasury yields have been rising a ton. Now, this isn't necessarily a bad thing, but what happens when you have such a rapid increase in rates, well, it has a big impact on the economy overall, especially the housing market, because it really affects mortgages. But what's also important is when you have such a rapid increase in rates, that hurts the valuations of stocks, right? So it's not necessarily bad to see yields increasing, but when they go up so much so quickly, that's not good. What's good though, or what's starting to look good, is we're now finally starting to see some of these yields come down. So like the 30-year and 10-year yields are starting to calm down a little bit, while we still have like the 1-year Treasury and 2-year Treasury just staying flat. So ideally what we would like to see is we would want to see yields just stay flat or continue to fall down a little bit. Realistically, they're not going to get to the same point they were earlier in the year, but that's totally fine. We just want to see them stop rising so quickly. We just want them to calm down, and that would be good for the market overall. Now, another important thing I want to talk about is S5TH. Basically, what this shows is the percentage of stocks in the S&P 500 above their 200-day moving average. I like to look at this a lot because it's pretty useful and it has worked very well in the past. And it's simple too. So basically, like this data metric constantly moves between like 90 and 10. When it's above or when it's at 90, it means 90% of stocks in the S&P 500 are above their 200-day moving average. When it's at 10, it means 10% of stocks in the S&P 500 are above their 200-day moving average. This has been a very useful source of market bottoms in the past. So if we look at this just as like through a couple of recent examples, anytime it touches 10, that has been a really good buy signal. So we can see it touch 10 in October this year. Oh, actually, I'll go back. October this year, we can see the orange line is the S&P 500. That ended up being a bottom. Touch 10 again in June 21st. That was a local bottom. Touch 10 again in March of 2020. That was a bottom. If we even move over more, we could see that it touched 10 yet again in December of 2018. That was a bottom. And you can go on and on and on throughout history. And this data point has been a very useful source of market bottoms. Right now, we are dead in the middle. We're right at 54, basically 50. So it's like the stock market's at a point right now where it's like, all right, we're at a huge resistance level. And it's just very mixed, you know what I mean? So like just the market and a lot of people are just waiting for that important economic data to release on December 13th and December 14th. I really think December 13th and December 14th will define the end of 2022. It's going to be such an important event, and it's just really going to just drive a ton of volatility and momentum into the markets. Now, talking more about a potential Santa rally and how December has been historically, we do have some optimistic things to look at. So we can see that, well, actually, let's just look at this chart. We can see, we'll run through each indice, but we can see December has been a very good month for the stock market, historically speaking. It's been good for the S&P 500, the Dow, the NASDAQ, and the Russell, but these four indexes are not necessarily equal when it comes to December. What's very interesting is we can see the Russell 2000 was finished positive in December 83% of the time since 1987. And when it finishes positive, it's not like it's up 0.2%. On average, it's up 2.8%, which is damn good. So that's very interesting. It's green 83% of the time. So that's big, and we're going to talk about it more in just a second. While the S&P 500 finished green in December 73% of the time, and this data goes all the way back to 1928, and the average gain was 1.4%. The Dow finished positive in December 71% of the time since 1896 for an average return of 1.4%. And then the NASDAQ doesn't do the best in December, but it still finished positive 61% of the time, and this data goes back to 1971 for an average gain of 1.7%. So the main takeaways from this data is, all right, December historically is a pretty good month, but it's not created equally among the different indexes. Clearly, the Russell has been the best. So maybe instead of looking at the S&P 500 for the end of December, maybe we look at IWM, which is the Russell 2000. For those of you who don't know, the Russell 2000 is just basically 2,000 relatively smaller cap stocks. So you won't find companies like Apple or Amazon or anything like that in this index. It's just slower, or not necessarily slower. They're more volatile, actually. They are just smaller. So keep that in mind. So maybe look at IWM for the end of the year, as historically they have been the strongest index in December. The S&P 500 came in second, and then the Dow, and then the NASDAQ. So that's very interesting. I will mainly be looking at IWM and SPY for this December. I feel like the Dow or DIA, this index has been doing very, very well this year compared to other indexes, but some of their holdings I feel are a little bit overbought. So that is interesting. Another thing I want to point out relative to the potential Santa rally that we have this year is that while December tends to be a good month for many stocks and many different indexes, it's important to understand that not, as we've just seen, not indexes are all created equally. The Russell did a lot better than the NASDAQ, historically speaking, in December. But you could say the same exact thing for stocks overall. So maybe instead of just trying to bet whether, let's say, the NASDAQ will rise up in December, maybe look at specific stocks instead. So what I like to do in this situation is I like to go to like a heat map, like on TradingView, and we can see the year-to-date return percentages for each stock. You know, we can see the energy stocks like ExxonMobil and Chevron crushed it this year, while at the same time tech stocks like Amazon and let's say Meta got absolutely clobbered. So what I like to do in this situation is I'll change the heat map to a monthly setting right here, and then it'll show you which stocks have been running up the most recently. So like for example, if we look at, let's say we go back to just like a year-to-date percentage, you know, ExxonMobil's up 71% right now. I'm not necessarily going to bet that this stock is going to explode in December. Like, it definitely can, but it's like the stock is up 71%. You know what I mean? So it's like the same risk reward setup or scenario just isn't there, in my opinion, with a stock like ExxonMobil or any other stock that has already exploded so far this year. What I like to do though is if we find some stocks that are, let's say, down a decent amount this year but are uptrending on the month, those can be some pretty solid opportunities because you'll have people buying the dip for them. Of course, you'll always have that constant stream of long-term investors, but you'll even get some of the shorts covering as well, which will just make the stock pop even more. So what I like to do is just monitor the performance monthly and keep an eye on what stocks are really moving, because that can be a very good opportunity for some short-term trades. If we look at like Meta, Google, and Microsoft recently, they've really been booming up, you know? So maybe these stocks will outperform relative to the S&P 500 overall and just maybe oil stocks towards the end of the year. So yeah, I mean, that's very interesting. I like to use this tool quite a bit. This data will constantly change, so I definitely recommend just checking back in on it every day or so. Just Google TradingView heat map, and then you can just toggle it however you want. I like to watch the monthly setting. It can give you a good gauge of what stocks are moving now, and it's pretty useful, so definitely check it out. And I also want to say, if you guys learned something from the video or you like it, make sure to subscribe. When you subscribe, you'll see my videos more often. I post all the time. Either way, I'm super excited for the end of 2022. It's been a brutal year for the stock market, but this end to the year, this December, I think will be filled with a ton of opportunities because we're at such a crucial point right now. We're at a major resistance that's been huge all year long. We have huge data set to release, and we're either going to rip through the resistance or we're going to tank down, you know? So I think either way, there will be big opportunities. Of course, when stocks go up, you know, you could just buy the stocks, you could buy call options. When stocks go down, you could buy puts, but you could also look at ETFs like UVXY. So what's interesting is, like, in the beginning of the video, we talked about VIX, the volatility index. Now it's been continuously bouncing off of 20. Basically, if you think it's going to bounce off 20 again and pop up, what you can do is you can just buy UVXY, and it moves in a very similar way. It's not one-to-one exact. VIX is the volatility index, while UVXY is an ETF. So keep that in mind. It doesn't move exact, but if VIX moves up, UVXY has a really good chance of moving up. Also, if you want to like bet against the market, you could buy like SPXS or anything like that. So either way, I think there's gonna be a ton of opportunity. And I think there's gonna be, I think it's gonna be a great way to end the year. If you guys like the video, make sure to subscribe and check out this video on the screen right now. I go deep into how to find some of the stocks with the best gain potential for 2023. It's an awesome video, and I highly recommend you check it out.